Well, stocks ending mostly lower yesterday after the Federal Reserve left interest rates unchanged at its policy meeting, and the Fed saying it sees no rate hikes in 2019. Fed Chairman Jay Powell again stressing the Fed is in no rush when it comes to moving on rates.
So, and in terms of what it would take, I'd say again today we don't see data coming in that suggests that we should move in either direction. They suggest that we should remain patient and let the situation clarify itself over time. When the time comes, we'll act appropriately.
All right. Well, let's bring in Lindsey Bell, CFRA investment strategist, and let's talk about this. What did you make of their decision and their forecast? The market certainly was pricing in no rate hikes for the year. That was confirmed yesterday.
Right. I think they're doing exactly what they should be doing right now. They're in a wait-and-see mode. The economic data has cooled off a little bit here in the U.S., but we at CFRA expect it to pick up later in the year for sure. But they're going to need more confirmation than that to either move higher or lower on interest rates. And the inflation picture, especially right now, has been very subdued. It's been a thorn in Jay Powell's side since he's taken the helm of the Fed early last year. You know, we've been at their 2% target on a core basis for quite some time now, and we don't see it getting above that this year.
You know, a couple of things. They did announce that they're going to stop shrinking the balance sheet. They're going to by the end of September. So we got the date. I know markets were looking for that certainty, but also they lowered their GDP forecast of the year to 2.1%. That's certainly newsmaking. But is the market going to really react to that moving forward, or is there more optimism, do you think, out there that they could maybe be wrong? It could be stronger.
Yeah, I mean, I think the reduction to 2.1 from 2.3, which was their prior guidance, really reflects the slowdown that we've seen in the first quarter. I think the shutdown in the government definitely had something to do with that. And again, like I said, jobs data, retail sales data, it's been a little bit mixed and confusing. We're not exactly sure the direction that some of these things are going in. So, yeah, I mean, it is kind of a negative when you think about it. It's below President Trump and the White House's goal for 3.2% GDP growth this year, right. Which is kind of a lofty expectation. So, but 2.1% still by historical standards is a decent rate.
Yeah, it certainly is. I agree. Let's move on to the other topic of the China trade issue. Treasury Secretary Steven Mnuchin, U.S. Trade Representative Robert Lighthizer, they're heading to Beijing next week for those trade talks with Chinese officials. Do you expect progress?
Yeah, I do expect progress. I think the market yesterday also kind of reacted to the news that tariffs could remain in place for quite some time, which I think that's something that the Trump administration really does need to do to really enforce these new potential trade tactics that they're going to have with China to tamp down the theft of technology and IP and things like that. So I think that we will see progress. We know that a deal needs to get done. There are some out there speculating that perhaps the Trump administration is trying to kick the can down the curve a little bit just to kind of help benefit the election cycle next year. But the sooner this gets resolved, the better. It's part of the reason why the Fed's on hold right now.
Well, you know, my colleague Dagan McDowell always says, you know, that these tariffs are a tax on the consumer. So we'll see if they can work things out. Lindsey Bell. Lindsey, thank you very much. It's good to have you on the show.
Thank you.